The PSU banks have been on the sell radar for many brokerages. IDFC-SSKI itself, they had upgraded the sector. It was a buy till just a month ago, and now it's been again put down, and it's been downgraded now to an underweight. We're now joined by Ritu Jindal to give us more details on that. How are these PSU banks looking, Ritu, technically, and as for what brokerages are talking about them?
Well, Damini, if you look at the F&O picture, and even on the technical side, most of the analysts have come on our channel and said that they're not very positive on especially the large cap PSU stocks. Some short positions have been built up in some of those banks after having shown stupendous outperformance over the past 6 months. But over the past week, especially last 2-3 days, we've seen a lot of concern. It could be profit booking, but there are concerns over, CRR hike coming in. There are expectations of rate tightening, which has actually prompted the brokerage house IDFC-SSKI to downgrade the sector to an underweight. Remember, just last month they had reiterated their overweight stance on this sector. Their argument last month was the fact that they would benefit from margin expansion, they would benefit from operating efficiencies. But right now, when the interest rate cycle is on the turn, analysts are moving towards private banks. They prefer private banks over PSU banks, clearly, because private banks enjoy a cushion of low-cost deposits. They have a higher share of CASA deposits, and they do not have as much exposure to the treasury book, which is the AFS book, as PSU banks do. So clearly, the focus has now shifted to private banks as far as the analyst community is concerned. The G6 tide, like I said, valuations also for some of these PSU banks, they are no longer at the lower end of the historical price to book band. Most of these likes of an SBI, like of a PNB, they are all trading at 2 to 2.2 times FY11 price to book, which is not exactly on the cheaper side as what it was 6 months back. So after the recent outperformance that we have seen, now analysts are not just booking profits, they are even looking at certain concerns coming in, largely on the back of rate tightening cycles and the impact on the treasury gains. Remember, over the past few quarters, treasury gains had been the drivers for the earnings. Advanced tax numbers clearly show that the PSU banks would not perhaps be able to deliver as strong treasury gains as they were in the previous quarters. So clearly some pressure there on the PSU banking lot.